What is harder, waiting or regret? The emotional trade-off in investment decisions. In financial markets, investors often face a difficult emotional choice. Is it harder to wait patiently or to live with regret later? Both experiences involve psychological discomfort. Waiting requires patience and discipline, while regret involves reflecting on a decision that turned out poorly. Understanding this tension is a key topic in behavioral finance. 1. The difficulty of waiting. Waiting can feel uncomfortable because humans naturally prefer immediate outcomes. Psychologists describe this tendency as delayed gratification. The concept was famously studied in the Stanford Marshmallow Experiment led by Walter Mischel. The experiment showed that individuals who could tolerate waiting for a larger reward often demonstrated better long-term outcomes in different areas of life. In investing, waiting may involve holding an asset during slow growth, sticking to a long-term plan despite volatility, resisting the urge to constantly trade. Although patience can be psychologically difficult, it is often associated with more stable investment behavior. 2. The weight of regret. While waiting can feel frustrating, regret carries a different kind of emotional burden. Psychologists refer to this as regret aversion. In investing, regret can occur when selling an asset before it rises significantly, missing a major market opportunity, making an impulsive decision that leads to losses. Regret is powerful because it involves looking backward and imagining a better alternative outcome. This mental comparison can amplify emotional pain even when the decision seemed reasonable at the time. 3. The action versus inaction regret. Research suggests an interesting pattern. In the short term, people often regret inaction, not acting. But in the long term, they tend to regret actions that turned out poorly. This dynamic is related to action bias. For investors, this means acting quickly may reduce immediate anxiety, but impulsive actions may lead to stronger regret later. Patience may feel uncomfortable now, but it can sometimes prevent deeper regret in the future. 4. The investor's emotional balance. Every investment decision contains some level of uncertainty. Investors therefore face a psychological balance. Waiting may cause impatience, fear of missing opportunities, temporary frustration. Rushing may cause financial losses, broken strategies, long-term regret. Understanding this balance helps investors avoid decisions driven purely by short-term emotions. 5. A useful reflection. Before making a financial decision, investors sometimes pause and ask, will waiting truly harm my strategy? Am I acting to reduce discomfort right now? Which outcome would be harder to accept later? This reflection shifts the focus from immediate emotional relief to long-term decision quality. Final insight. Waiting and regret are both emotionally challenging, but they represent different types of discomfort. Waiting is a temporary struggle with uncertainty, while regret is often a lasting reflection on past choices. In investing, the key question sometimes becomes, is it harder to wait today or to regret tomorrow?